ProAct Traders. This is a short video on what happens when the market reverses. You know, when we first started trading, once we got into a trend, and those were back in the days when trends were actually pretty prevalent, as long as we caught a trend, we could do pretty well. What stymied us is when the market reversed and we didn't know where it was trying to go. And we were in the process of trying to learn not to scalp, but actually to learn to trade like the big boys. And we couldn't figure it out, all right? So I went to one of my mentors. He said, it's really easy. I'll show you how to do that, all right? So that's what I'm going to do today, show you how to do that, all right? So we've got a couple of currencies that are reversing here, okay? So I'm up on a 240-minute chart, okay? Now, what gives you the hint that it's going to reverse? Well, first of all, you hit a day chart top. That's the first thing. But number two is MACD will already be telling you we're going to reverse at this top, okay? So you can see that right down here as MACD begins the process of going down. And over here, this was going up. This was going right here. You see this was going down when this was going up. All right, now they've made a lower high, all right there. All right, so where are they trying to go? All right, so all we do is go back up to that 240, and it doesn't matter if you do it on a 240, it's where you find the leg, all right? So it's important that you understand that each one of these pieces is a different leg. This is a leg, all right? That's a leg, that's a leg, and that's a leg, all right? So if I'm going to reverse this whole move, okay, I've got a couple of options here, all right? The first one is to find the initial move. Where is this trying to go? So I'll take the fib from this low to the next one. All right, so the first thing is to take this leg right here, and we'll pop a fib from the swing low to the swing high, all right? Now you can see they already know where the 214 is, all right? But if so we got some targets down in here to use. Now, how do we prove that those are right? We'll just take a second and go the opposite way like this. And they have to prove to you without a shadow of a doubt that they know the numbers, that they know the numbers, that they know the number, that they know the number. You see that? That they know the number, right? That they know the number, right? So now you know these are their numbers that they're using, all right? And so now it's possible to find where they're going if this down move continues, all right? All right, so you can see next stop is the 382, then the 50, then the 618, 786. Now, if we blow out the bottom here, all we have to do is redo this fib all the way to the bottom like that. All right, oops, sorry, let me get rid of that. Get the right tool again. All right, all the way down to here, see? And now we'll have the bigger fibs when we get down in this area, all right? Let's go take a look at another currency. Let's look at the Aussie. Aussie is a great beginner currency, and we're beginning here. All right, so you can see we're making a turn. I'm up here in a 240. MACD has already had a zero line break on the 240. All right, so let's get down to the 60. Once again, you see the same situation. All right, we got divergence, right? And then we have convergence and a zero line break to the downside right here. See that? And now we're officially a seller to the downside. Okay, so where are we going, right? Well, we go back up to that 240, and it doesn't matter if you go to 240. Where can I see the legs, okay? So I can see here, these are pretty small, pretty tight in here. So in this case, I'm going to use the big one from the swing low to the swing high right there. See there? All right, now, I got to prove that they're using those numbers. So all I do is go the opposite way. See, like this, right? And now I check it. Stop, and do they know the numbers? 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 All right, see? And once you prove that they know the numbers without a shadow of a doubt, right in here, see that? Know the numbers? Know the numbers, know the numbers. Now, you know that these are good targets to the downside, right? So you simply get rid of this, clean your charts up. You don't need this, but you have used it for a purpose. That was to prove it, all right? So now we know where we're trying to go to the downside. Next target's the 382, the 50, the 618, and the 786. And we can make risk for reward decisions in here, right? Obviously, the best thing to do is overlay where the ATR is and find that, all right? So just as a curiosity, let's do that real quick. I'm going to use the ATR. If you don't have the ATR in your charts, shame on you. You need to have them on there. Put it on a day chart. If you're not using our charts, we have a little tool that does it for us. But if you're not using our charts, you got to put it on your charts, the ATR on your MT4 or trading view. All right, so let's go to the Aussie dollar right here, and 58 pip ATR. We use the 14-day. It averages 61 a day, so right 58 to 61. So we just find the 5 o'clock candle from yesterday. I'm going to go down to a 60-minute chart. Find 5 o'clock from yesterday, which is 1600 for me right there on that little red candle. I take the open, and I'm going down for 58 pips. All right, 58 pips. All right, and now you can see that for me to target the 618 is foolish. Why? Because the ATR, when it does day in and day out, is on the 50. All right, so there are two trades in here. There's one right there, and one right there. And you would trade that with 1/3 of your lots and 2/3 of your lots. It's what we call a snowman. You can see it pretty easily. All right, let me show you another one real quick. Let's go over to a really rocker, pound New Zealand. Okay, what do you do, all right, when you've already targeted to the downside, you've got the targets, all right, and now you reversed and you're going back up, as in a range type of situation, all right? Well, it doesn't change. If they're going up here, they are going to be retracing this move right here, which is already printed, all right? So you just simply fib from the swing low to the swing high, all right? And now you check it. Notice that once that happened, all right, we got a lot of confluence here, but trade 1 was here on the bounce, trade 2 was here, right? Trade 3 was here. Trade 4 is all the way up here. See, there it is. It's all real simple. Oh, we're reversing again now. Oh, okay, so we knew how to trade it to the upside. Now we're going back down. All right, so now we're going to retrace this move here, all right, to the downside. You see, they already know where that fib is. They know where that fib is, all right? So the next fib is right here, 618, and down here. Watch as we put the ATR on to find the target. These are a target. Let's find the target. Pound New Zealand, 118 pip ATR, but it can go 129. So you take that into account that if we start seeing some real activity here, we could go 129 pips. So we're going to find the 5 o'clock candle from yesterday. All right, and that's 1600 for me. 1600 is that bear candle, and we're going to go down for 118 pips, 118. And now we know to target, actually target the bottom now. All right, so where's the trades? Okay, trade 1 is right here, trade 2 is right here. Trade 3 is right there to the target, and then hold for the bottom here, because that's 118 pips there, but that would be 129, and you see how close they are to it. So you would hold for that target. All right, hope that helps you. We'd love to see you come into our room, take a look and see around. You'll see lots of traders making hundreds and hundreds and hundreds of pips. And this should solve your problem. And where is the market trying to go today?